Welcome to the Farming Without the Bank podcast, the show with a no BS approach to money, hosted by a farm strategy expert and authorized IBC practitioner. Join us as we get real and expose the flaws of traditional financial institutions in order to help farmers take control of their finances, create peace of mind, grow their wealth, and leave a legacy. Now, here's your host, Mary Jo Ehrman.
Hello, and thank you for tuning in to the podcast. I appreciate it. Please, I'm going to beg you again, please leave a review if you have found these podcasts useful and you are enjoying them and not quite sick of me yet. All right, today let's talk about why would we want to borrow from the policy instead of going to the bank? Is it all about the interest rate? Oh, you guys, do I have a story for you. The German Passion's probably going to come out in this episode. Just a forewarning. Just a forewarning. Oh my gosh. Okay, so you know how you go to the bank every year for your operating note and they're like, well, I don't know if I should give you the money. Are you going to be able to pay it back? What are your numbers? What is it going to look like? Oh, commodity prices are low. And they just put you through the ringer. And then y'all get mad. And then you call me and say, I'm so sick and tired of the bank. And I mean, I hear it all the time, right? But by the end of the year, they gave you the money. So by the end of the year, we forget about it. And then next year, it all starts over. And every single year, we get ticked off. Well, that kind of happened to me, you guys, except it's not every year, right? Because you all know, if you've listened since the beginning and read my book and listened to whatever else I do, y'all know that I do not farm. But my husband and I are buying some acreage. And we're actually buying a farm, but we've yet to determine. I am not having cows. As much as I love like bottle calves and I loved our cattle operation. That was my favorite part growing up, was the cows. I didn't ever really go do any of the farming because I had two older brothers and they didn't need my help. So I didn't really do any of the farming side of it. I love the cows, but my goodness, I want to like leave the farm once in a while and not have to feed cows twice a day. I have a job. I do not want to be feeding cows twice a day. So we are not going to have any cows. That is for sure. We might do some other stuff, but we will not have cattle. Anyway, so we go to buy this land and it's a nightmare. It is an absolute nightmare. I have nearly enough cash on hand to just pay cash for it. I've got money in my policies, but guess what? The interest rate in my policy is higher than 2.5%, which is what the bank loan rate would be. So I have to split the land and do an ag loan, and I have to do a conventional mortgage. Well, I want to do conventional mortgage because it's 2.5%. Ag loans they're not 2.5%, and they're not a fixed rate, and everything's all variable. And so I don't want to do an ag loan on all of it. And oh my gosh, well, are you going to farm? And then the conventional side says, well, there's a grain bin on there, so we can't give you a conventional loan if you're going to farm. And on the farm side, they say, well, if you're not farming, we can't give you a farm loan. Oh my gosh, it's insane. So we get it all figured out. And then on the conventional side, holy hell. Well, Mary Jo, how do you justify your income? It doesn't work out every month. Yes, because I work on commission. I don't have a steady income. My income is whatever my income happens to be that month. I don't know what it's going to be. I mean, it threw these people for such a loop. It was unbelievable. And it wasn't the banker. Now, keep in mind, it is not the banker. It is the government, or Fannie Mae. I call them the government. They're not really a government agency, but it's Fannie Mae people, right? It's the underwriters who are sitting behind a desk and checking some marks, and holy cow, we can't check these marks because we don't know where the income is coming from. I'm thinking I may have been better off going and getting a job for 3 months an actual job for 3 months and saying, okay, yeah, I'm just an employee, and then quitting after 3 months when everything closed. I mean, it was the most ridiculous thing ever. And I have experienced that before when we've refinanced our house and I was a business owner at that time. But guess what? You forget about the pain. And so people ask me, Mary Jo, why would I take a loan from the policy at 4.5%, 5%, 6%, depending on whatever company? Why would I take a loan from the policy when I can go get a loan at the bank for 2%? Well, here's the deal, you guys, because at 2%, it's cheaper, right? But you have to jump through all those loopholes. Was 2.5% worth the pain and agony that I'm saving? I actually ran the numbers because I was so irritated. I almost said, forget it, I'm paying cash and I'm just going to be done with it. And I'll just pay it all back to my policy. I don't even care. Because it is not always about the interest rate. Sometimes it's just about peace of mind and control. And that is exactly what Nelson said it's all about. He didn't care about the interest rates, right? Even in this low interest rate environment, Nelson only passed away in the last year and a half. We're coming on 2 years. So interest rates were already low. We have to remember, he came from an interest rate environment in the 80s at 23%, where he was borrowing at 8% in some of his policies. Well, some insurance companies are still charging 8%, and the bank is charging 2%, or an insurance company will charge 5%, and the bank is charging 2%. After this experience, I will pay 5% all day long. Because I could have said, I want this property. I would not have had all these expenses of closing costs because the fees for this and a fee for that and a fee for that, ridiculous. Oh, and then you can't write a personal check at closing. No. You need to wire the money. Oh, that's a $20 fee. You need to have an appraisal, right? Even though appraisals are a big joke, in my opinion, if somebody out there is an appraiser and you can explain to me how that crap works, I'd be more than happy to listen. So you got to pay for somebody to tell you what they think your property is worth, right? Because it's not really, they can show you a comp, but that doesn't even really make any sense. Then you have to have, you better prove that you have insurance. And holy cow, we have to figure the insurance in there to make sure you can still afford everything. I mean, it is absolutely ridiculous, the amount of money that they want in closing costs and fees. When I could have just said, you know what, I'm going to save all that money in closing costs, and I'm just going to write the owner a check. And in 3 days, we can close if we need to, because that's all I need. I only really need 24 hours to get my money. But it's going to take 3 to 5 days. So in a week, we're closing, we're done. I don't need an appraisal. I don't need somebody's okay for absolutely anything. You just write the check and you buy it. So why do we want to pay 4.5%, 5% to an insurance company to use their money? Because they don't ask any questions. That's why. Your money is sitting there in that account. They'll send you a check. They'll ACH the money to your account and you're closing right away with no loopholes to have to go through. And then you get to decide when you're going to pay it back. They don't tell you how to do that. They don't make all these 5-year arms and all this other junk that the banks are making. Now, I understand why the bank does it. I understand why Fannie Mae asks all the questions. Oh, I get that. The fact that they have no common sense is what drives me insane. But I get it. I get that people don't pay their bills. I get that people are over leveraged. But when you're sitting on enough money to pay for the place and they're still questioning, that's the part that annoys me. As a business owner, as a farmer, as a rancher, as a self-employed individual, That is the pain that we feel that an employee is never going to have to feel. And if they do feel it, if you're feeling that pain as an employee, it is most likely in a situation where we don't have the money, right? We have too much debt to income ratio. That's justifiable. I get that. You have overspent. We need to cut back on spending. We have credit card bills. We have all these expenses, and the bank says, I don't know how you're going to pay for that. Because frankly, when people come to see me, I say the same thing. But in a situation where there's not steady income, it doesn't matter if you're a farmer or a business owner, you get treated exactly the same. And it completely throws our system off. The system was built for employees, not self-employed individuals. Am I kicking myself a little bit for not quite being as frugal and beating Parkinson's law as much as I should have in the last 10 years to build up enough money to have paid cash for this place? Absolutely. Absolutely. I mean, I had no idea, even 3 years ago, that we would be buying a place like this. I had no idea. It was something that came on the market and I said, this is great. This is what we want. Fantastic. Let's do it, right? Not something that I was necessarily looking for. It's much larger than what we were looking for, but it was a deal and I'm going to take advantage of the deal. But by not being a little bit frugal, and we spent money here and there, that had we not spent that money, would have I had enough to say, you know what? I am not using the bank at all. Maybe. I would have to go back and look at everything we've done, right? But I may have had enough to say, you know what? Done. I'm not paying all these closing costs, these fees, and I'm not going through this headache of nonstop stupid questions. Now, on the flip side, thank God for all those stupid questions that they ask us because they tick y'all off, and that's why you're listening to the podcast. So without the bank, if the bank made it easy, guess what? Nobody would even care about what I have to say. But it's so frustrating. It is not all about that very long story and ranting and raving. It's not all about the interest rate. It is about liquidity and control. I always say liquidity, control, and guarantees. But in this situation, it's about liquidity and control. I have control of the payback terms, and I had the liquid money to pay for it. Now, am I going to be more frugal and pay closer attention to what I'm doing going forward? You darn right, because if an opportunity comes available again, I want to have the cash. I don't want to have to do this next time. Even though the interest rates are low, I don't want to have to do this because frankly, it was more time than I needed to spend. And guess what? My time is better spent with clients than with a banker answering stupid Fannie Mae questions. Because they're stupid. I have zero patience when people ask me questions and I just gave you my P&L, I gave you bank statements, I gave you everything that you needed, and now you want my firstborn child and a pint of blood. Completely ridiculous. So when you are saying, why should I borrow from the policy? Interest rates are low. If you're buying a vehicle, they'll give you a loan in 2 seconds. If you're buying land, if you're buying cows, if you're buying feeders, right? If you're buying equipment, some of that stuff is not that easy to just get a loan for, especially if you have a feedlot. And I've seen this a lot with guys that have feeder cows and they've got a feedlot. When you want to go buy a truckload of cattle because you got a heck of a deal on them, the bank might say, oh gosh, I don't know. How are you going to make that payment? I don't think you should be buying them because they don't understand that you're getting a deal. When you have that opportunity or you have an opportunity to expand and you can go to your policy when the bank says no, now you have the upper hand. But to get there, we have to beat that little thing called Parkinson's law, right? I did not beat Parkinson's law. I myself It takes, you guys, I eat, sleep, and breathe this stuff, and I still fall back into the old ways. Nobody is perfect. It's going to take you time to get your head around the whole infinite banking thing and understand the concept and all the things that we need to do to get ahead. Because the people that are getting ahead are not foolishly spending money. They're waiting for an opportunity. And then when they have what they need, then they might be buying those nice things, right? Because they have the cash flow to do that. But in the meantime, they're not foolishly spending money. Instead, that money is sitting there waiting for an opportunity. It remains liquid, and they have control of it. They don't have to go to the bank for everything. Now, if we went to the bank and it was easy, great. Will I forget about this and maybe put myself through this again in the future? Possibly, because apparently I forgot what it was like, 9-10 years ago when I did it. So I had to be kindly reminded. You guys are kindly reminded typically on a yearly basis. And you get mad and you forget, and then you go back to the bank and you get mad and you forget. How many times do we get mad before we do something different about it? For me, this was very painful and annoying. And so it's going to be different. It truly will be different going forward, because this whole thing has just made me so mad. And I hear about it all the time. I know what you guys are going through because I've gone through it myself, even though I'm not a farmer. But we have to remember, do we want to be in control? Do we really want to go to the bank for a loan? If it's easy and it's not painful, great. The egg loan was super easy. That was super easy. I didn't have any stupid questions to answer. I got that loan without a problem. It was the mortgage side of it that was an absolute nightmare. And so would I maybe do another egg loan? Maybe, because that was really easy. But on the flip side of it, you need more down. Well, I was in a position where I had more to put down, but if we don't have more to put down, then it would have been painful, right? So something to think about when you're questioning, why should I be taking a loan from the policy at a higher interest rate than going to the bank? There are times, my friends, there are times when you are just going to want to call the insurance company, have your money in 3 days and be done with it. And there are times when you're going to want to go to the bank and say, hey, you know what? I do need that loan that's a little bit less interest because it's just going to make more sense. I'm going to leave some money liquid in the policy for something else. It is not a cut and dried answer to interest rate because that alone does not always matter. All right. I hope that helped. And thanks for letting me vent. Oh my gosh. It was painful. It was painful and irritating. And at the same time, I'm thankful because the stupidity gives me a job, right? I mean, it is why you all are listening. As always, let me know if you have questions, want me to cover a topic, whatever. I am here to help. Mary Jo at withoutthebank.com. I'm happy to answer those questions. If you have the book, get your appointment scheduled. You get emails. If you purchase the book, you get an email. In those emails is a link to my calendar. You can schedule that way. If you are not getting emails, they're going to spam. Check your spam folder and then mark us as safe if you want to get those emails. Thank you very much for being here again and for listening, and I will catch you guys on the next podcast.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.